everyone, Les here from BG Trading. Hope you are well. Today is May 7, 2024, and I'm going to be talking about ZIP once again. Analyze the chart formation. The company has been continues to improve its fundamentals as we have previously forecasted. We are not holding ZIP. We think ZIP could go under $1 a share. Potentially we are wrong, but we want to explore that maybe that opportunity if that happens. So obviously it went up 20%. We missed this last potential trading opportunities. We are a little bit bearish about the short term when the other way around, so we don't get right all the time, but we're not holding, so it doesn't really matter. We locked 80% in our last trade with ZIP together with our VIP members. So, but deserves to take a look because a lot of people has been asking us about ZIP. And then also, I'm going to be talking about 4 stocks trading at technically discounted price according to BGS 20 strategy. Okay, and those 4 stocks, they are high quality businesses. They are businesses that are has been running for years. They are EBITDA positive, all of them, and then they are trading at a significant discounted price. That's exactly where we like to enter. Let's have a look. Remember, this is not a financial advice. Make sure if you're gonna buy a stock, do your own due diligence. Talk to your own financial advisor. We only share with you how we trade using BGS 20 strategy to chase 20 to 40% together with our VIP members. Those trades lead time generally are from 1 to 3 months time. Sometimes we complete trades in a matter of days, other times take more than 3 months, but mostly important, we focus into sticking with our strategy, which includes not only the technical aspect but also the fundamentals, and we link with what's happening or what is the macroeconomics outlook for the short to medium term that could directly affect not only the stock that we're talking about, but the sector. So one thing I wanted to notice is if you realize now we are going to be talking about ZIP, then corporate travel management, which the SS code is CTD, then BHP Group, which is BHP, then CETTIRE Limited, which is a CTT, and the Kogan, which is KGN. So they are all, most of them from different sectors, which enhances the idea that we need to diversify all the time. The importance of diversify is one of the key elements of BGS 20 strategy. And then obviously you don't want to put your money all in one basket. You heard that many times. So diversify in high quality stocks into when we are going through a very uncertain period of time is key, is a key to success, to hold your capital. That's how we see here at BG Trading. Now let's jump straight into ZIP. Fantastic. So ZIP is currently trading at 137. This is what our modeling, that's what we thought was going to happen, but we got wrong. The stock went up again, and we missed about 20% rally here, as you can see. 30% rally. There was a big rally. So now, would I be buying ZIP? Not. The reason I'm not interested in buying ZIP now is, first of all, it's still trading. The stock itself, you see the candles, the green candles, is still trading way too far from the simple moving average of 250 days, the SMA 250, and generally we see stocks testing again even when they are in bullish trend. So I would wait potentially to see the candles. I was actually expecting buying ZIP under $1. It didn't happen. Maybe never gonna happen, but it didn't happen yet. If the stock falls to these sort of levels here on this support, then I will be potentially looking at buying ZIP again. But now it is, we got wrong on this short term. We missed that. It is bullish at the moment for us. Is if you're holding, I would suggest to be holding. I would be holding myself if I was holding, not locking until we see the candles testing this resistance level here at $1.50 again, and then that's where we should be potentially looking at selling, like locking the profit, or if you're expecting to break out, then just keep holding. But I would most likely be locking our profits, because we don't invest on the stock market, we only trade. We think investing is in a highly manipulated environment. It's not the best place where we want to be putting our money for the long term. So what we do, we invest in real estate, we buy properties, and that's how we create wealth through trading and investing, all combined. So for us, ZIP is a hold, and I will be looking at selling if I was holding around $1.50, and then potentially buy back under a lower level. It's too high for me to enter again, so just keep that a miss. Now, next stock is first one. It's maybe a bit boring for you, but let's say if you don't know where to put your money on the stock market, this could be an interesting stock to look at. BHP Group. It's number one in the world iron ore producer. Also has a really good copper project as well, and then what happened here is we can see like what the analysts like to say, double bottom here. And we could see the stock reaching sort of $50 again if this double bottom is completed, and then you see this RSI as well, the relative strength index is also constructive, and double bottom with a bullish interest, which is just a green candle at the moment here. So we have two technical indications plus the RSI, so it's three technical indications suggesting a potential reversal, and the fact that mostly important, BHP is trading at technically discounted price. If you ever want to invest in a stock, whatever, blue chip stock or anything, you need to look into moments where the particular asset is trading at technically discounted price. That's where you're making the money, when you're buying, not just when you're selling. Because as soon as it adjusts its price, if it goes back into the sort of a level here, you're making 6%, which is pretty much annual return of a term deposit. And it could take only weeks or even days, for example. But if you go all the way through from this point B here to $50, which we see as a strong resistance level, then we make it 20%. We'll be making 20% in a few months. That's by far one of the least risk opportunities in the market, but you need to be buying at a technically discounted price. And obviously the risk lies on iron ore prices and China economy and all those sort of things. But if you look at the iron ore prices right now as we speak, and it has actually improving quite remarkably over the last 30 days. So from the commodity perspective is certainly positive. And so if you look at copper as well, copper is also improving quite remarkably. So I would say certainly a good entry opportunity for BHP as we speak, not only for trading, but if you really still insisting investing on the long term, you want to buy again at those lower levels right here under those lines here, on those moving averages, technically discounted price. So let's move to the next one, which is a completely different sector. So CTD CETTIRE Limited. This is a stock that we have traded many times. Last time we decided to take stop loss because we didn't know how the higher than expected CPI would affect, but looks like things are adjusting back, and the stock is now trading pretty much where we took our stop loss last time. And I decided just to bring this stock here is not only because it's trading a technically discounted price for the long term and for the short term, as you can see, trading under the pink line and the red line, but also is a company that reported very strong fundamentals. It is a business that's growing. They have just been penetrating in China recently with a Chinese business. It's a high-end market, so they work with incredibly high gross profit, and generally you want to be at the lower at the lower risk side, which is exactly what this business offers. We have a dedicated stock analysis on our stock analysis sessions for CETTIRE Limited. It's interesting if you ever going to invest or buy or trade this stock, you need to understand what's happening behind the scenes, not just with the technical aspects. The only threat here is obviously inflation and CPI. If interest rates goes up again across the world, that will squeeze discretionary spending, and that directly affects stocks like CETTIRE. Ain't gonna be negative because people will spend less, have to keep money in a mortgage and things like that. So just watch out for interest rates. And once again, I was talking to a client this morning. We are kind of back where we were in the second 2 quarters of last year. The second and the third quarter, where inflation was up and down, and then the market sentiment was shifting. So volatility, very, very normal during this part of the year. And as I said to some of my members, we are likely to make a lot less exits at 20 to 40% during the upcoming months. Okay, but still opportunities for buying high quality stocks at lower level of the range. I'm seeing the markets moving sideways, potentially a little bit towards the bearish side, but moving sideways for these next few months of the year. So just watch that out. So technically discounted price, buying opportunity with sort of like bullish intersection a little bit. The only thing concerns me is the fact that volume is really low at the moment. So we should have this bullish intersection level 2, which means the green candle, as you can see there, I'm going to put in the zone for you, crossing the yellow line, and ideally we want those candles to be trading above the yellow line, not under. You see, at the downside, the candles trade most of the time below the yellow line, so we want to be trading above for quite some time. So it could be here the turning point, but will depend on RBA message to the market today, and whether the upcoming CPI for April month will be lower than expected. And then obviously, if that is the case, I'm expecting a really sort of good rally looking forwards. If not, then we could even test 240. So just watch out. And then obviously, if you trade, remember, every time you're trading stocks, doesn't matter if it's the best stock in the world, trading for the short term, make sure you have a stop loss if you need to protect your capital. Unless you're able to hold the stock for longer than ideally you would like to in the trade time frame, you need to make sure you are protecting your asset, okay? And then once the stock reaches the target, exit, lock in, move on. Doesn't matter if the stock keeps moving up, okay? And that's exactly what happened with ZIP for us. We sold at $1.10, but we are at 80%. And then the only reason we look at the back today is because many clients are asking us about ZIP, so I brought back for you. Now the next one is the one that we posted a video last week, which is Kogan. Kogan again, like CETTIRE Limited and even BHP. So it is a stock that has a company that has been improving its fundamentals. Okay, sales are a little bit down, but the net profit for the first quarter was remarkably higher, over 100% higher than the previous year. And then the full year result should be also higher in terms of net profits, and which means the company is restructuring itself, adjusting to this current market conditions. That's what investors need to see. But those last two stocks, both of those companies have been affected by some media speculation, some potential problems with the management, and then that's why they suffer a lot like this. But I'm seeing some good signs here, some constructive signs. First one is obviously the fact that the Kogan has stopped falling and is holding its at this hypothetical support level. And also I'm seeing some large green candles start popping up, which could suggest a potential reversal. At the moment, for me, honestly, it shows an incredibly good value at the current level for short-term trade. Remember that. Can I be wrong? Yes, of course I can be wrong. So you need to make sure you have a stop loss if you need to protect for the short term. Okay, but I'm expecting second half to be in line with first half, despite some potential reduction on consumer discretionary spending, but still offering great opportunity with highly de-risked. See, like half of the risk is gone because you're buying at a very low price here, relatively low price. What worries me here as well, if we buy at the top, once again, was this distance in between the SMA 40 and the SMA 250. Remember when I said that about ZIP? ZIP worries me, those distances as well. And it still worries me, to be honest. That's why I'm not looking to buy this now. So this distance between this red line and the pink line right under there. So look, it's the SMA 250 for ZIP is sitting at 62 cents, and the SMA 40 is at 130. It's a huge distance, and history shows us that sooner or later stock tends to test the SMA 250 again, and I don't want to be there to test if I'm holding at the top. So that's why this is the classic example. You see, CTT was trading really high. You see the distance, and then went back to test. So it's really high here. The distance was similar than we were seeing a ZIP, but then went back to test. Then Kogan also was trading really high, went back to test, and even trading under now. That's where we wanted to be buying. Then another one, even the blue chip BHP, exactly the same, was trading really high here. You see the distance in between the red line and the pink line, and now it's trading under in a bearish mode. So you need to have patience and make sure once you've done the trade, don't look at back, let it go and wait for the next opportunity. In the meantime, you can trade many other stocks as we are doing right here. Now the last one is corporate travel management, which is the X code is CTD. This is another one. Excellent management fundamentals continues to improve, okay, but has been caught out by high inflation, with the short-term outlook of reduction of consumer spending, business spending due to high interest rates. So what happens if we have interest rates cut? The stocks like this, all of those stocks except by BHP, they should outperform the market. But mostly important, when you buy in lower levels like this, so you highly de-risk it. We still could come down to test $14, but looks like it's holding on $15 really well. So just have to have patience. Once you have you're holding a stock with a high quality company, and you bought at the lower levels, so just have patience. Let it go, make your trade, and move on to another stock. Okay, so essentially trading technically discounted price. First signs of reversal right here at with this green candle. Still a very early stage, but if you want a maximum profit in the range, so you need to buy at the early stages. Okay, so all those stocks for us is a buy opportunity now. Obviously, remember, if you're going to buy stock, make sure you have a target. The problem is when we come here, we mention about buying opportunities, and some people later on come to me and say like, you didn't tell when to sell. Of course, we only, that's why we have our VIP membership program, because we tell exactly when we are buying, exactly when we are selling with the target. So when we set the target, doesn't matter if it's $20, $22, $24. Some stocks we have 2-3 targets. So when we set up targets, you need to stick with the target, and once the stock reaches the target, just sell it. Okay, sell it, and that's it. I've been telling you this many times, and I will keep repeating, because our mission here is make sure you avoid doing the common mistakes. Because look at this rally here, 37%. If you haven't locked the target, you'd have lost all your profit. Okay. And here again, and here again. So that's why stocks are going to be trading up and down most of the time. Very few stocks, they keep moving up forever. Very few stocks. We have some example, not forever, but for the long term. For example, we have Macquarie Bank, which have done exceptionally well. Then we have Commonwealth Bank, which also from the Big Four is the only one that outstands from the rest of the banks. And CSL, for example, as well. Companies that keeps improving its earnings year on year, not a cyclical. Okay, so I hope this video is valuable for you. Let us know what you think, and I hope to see you in the next video. Thank you.